Business loans for small businesses up to 2 million, 5 million and above. But more importantly, one thing you are overlooking that could be the actual answer to what you need ultimately to get funding. Hi, this is Michael with Viral Funding Solutions. I'm an expert business loan broker. No further introduction. I'm going to end this video here in a few minutes. Very quickly, there are a lot of funding options. Not always are they APR traditional business loans. Not always are they lines of credits from the bank or multiple ones. Or are they maybe business credit cards or personal credit cards? However, you need to look at the 3 C's of capital and optimize all 3 of them if you can. Or we look at one of the 3, 2 of these 3, or all 3. And we look at saying, can we get you funding faster? Are you looking to wait? And if you waited, what would it take to ultimately get all that you need? So we have cash flow, credit, collateral. And a lot of businesses are looking at it as, well, I want a 36, 48 month term with the lowest interest rates. They want something like 6% and that. And a lot of them, they can't qualify for lower rates. A lot of this is already expensive. It's not supposed to be inexpensive. The purpose of it is growing and expanding a business where you can take revenue-based funding, cash flow financing, where we're looking at bank statements a lot of the time, and you're saying, hey, I got this, I'm getting 15,000, I'm paying 23,000 over 6 months. Even if that's the case, I'm going to turn this into 30, 40, 50,000. Even if you're not, you're going backwards, and you're probably needing a fix for something, a payroll reasons, you need it for other things you're trying to do. There's a lot of reasons. Then you may need to use it momentarily for that reason, or focus on all that and then come back and get more and use it for other things if need be. So one thing you want to pay attention to is credit-based financing. I can go deep into each and every one of these, but I want to focus on the credit. I'm doing a lot of questionnaires, which, by the way, I'll leave this down below in the description. If you have filled it out, I'll get back to you. Perhaps I already have. And what you can do is fill out that questionnaire to get in touch. I'll give you an email response back once I analyze and evaluate it. I'll look at it, and I'm looking at it from the eyes of an underwriter. If you think about it, I'm a pre-underwriter. I know what the best underwriters and lenders want, and I work with the best internal team, and everything I have, I vetted it through. And so when you fill that out, I'll evaluate, analyze, and give you a proper response back via email on your best funding option and options, thoroughly broken down from top to bottom, whether you can or can't qualify for it. I'm doing a lot of catching up on these right now, and I have plenty more to get back to. Thanks for being patient as well if you're one of those. So what I recommend is, hey, well, like example, I have a file that I may be looking at when you submit the questionnaire, and it's very confidential, safe and secure, by the way. You're working with the best. You're in the safest of hands. Not these people who overpromise, underdeliver, overwhelm you. You're not getting the best terms rates. You don't even know who they are or what kind of relationship personally and in business you have. See, I have multiple businesses myself, so I have to be careful of who I give that to as well. So I don't want to just hand it off to anybody. So I know what you're going through. I receive funding from my businesses multiple times on multiple accounts. And so you want the best. So what happens is when you have, for example, 15,000 in monthly revenue, let's say you qualify with 3 months or 4 months time in business and at least 3 months of bank statements, you have the revenue, you probably wanted more than what you can actually get, or you're probably around the range of an approval. And I'll show you how these work when you fill out the questionnaire as well. And so you're saying, well, if I wanted to start off with something, maybe I'm only going to get 25,000, doing 15,000 a month. Okay. Or excuse me, maybe even 75% of that 15,000, or maybe just 15 to 20,000 to begin with. Excuse me. We can't take too high of a risk. I had cereal earlier, so the milk. And so what you have to look at is say, okay, I can't, you got to think about it and go, what is my credit at? So if you're doing 15,000, and there's more details that I look at and the underwriters and everybody else, but if you have like a 680 or 700 and above FICO Experian credit score, that opens up another door to do credit-based financing. We can go more creative in terms of financing on the credit side. And that's a strong point. And so FICO Experian 680, but best is 700. 680 to 700 is a major difference, whether you think about it or not, because you may already have high balances. It also has to do with strong credit history and a few more things. So it's a major difference. And I've seen from a 680 to a 700, like 680 can get declined even more. And you don't qualify for maybe personal lines of credit, but you do qualify for installment loans or term loans. And you may somewhat, not always qualify though, for those business credit cards at 0% interest for 6 to 18 months and do a business credit card stacking. We may be able to do a little bit and a little bit on the personal side. But see how creative we can get now? Maybe we even look at 401k IRA financing, whether you are a startup or a non-startup, and that's a direction you want to lean in. Maybe you have nobody that you can get help with. Maybe your credit isn't enough. Maybe you do or don't have the revenue, so we could do revenue-based financing, or can't. You don't have the collateral, so we can't do that, or you don't want to go that direction. So credit-based financing, if we did an installment loan and you have the credit profile for it, you can stretch that from 1 to 5 years, somewhere between 6 to 18% interest, where I see about 7 to 15% a lot of the times right now. Instead of we go to the revenue-based lender, you might get 30% of 1.3 factor rate, but that's not the biggest problem. The problem is that how you use the money. If you're not using it correctly, you're just using it to save. The only reason you wanted funding was for working capital, and you couldn't get 20 paid back 32,000 on it or something like that. Well, it makes more sense because cash flow wise, you might take a setback if you haven't already. And sometimes if you take a setback with cash flow, you have to look at the market. I have a lot of different businesses and business owners, and myself too, included in what I'm doing, not only in this business, but I go, well, if I have to take a temporary setback in cash flow where I won't go necessarily negative, or maybe you will go negative, but you go, I got to make repairs. I have no other way to do this. My credit isn't where it needs to be. I can't get a guarantor. I need money fast. Okay, I'm in a tight pinch. Let's get it in. Let's get out. And then that will then come back maybe. Now you have a fix. Now you come back if you want more funding. Now you're using that money for growing and expanding. So it's all the ways you look at it. And you can't always get a business line of credit because you don't have the credit. The revenue is much harder nowadays in this market. You're looking at 40 to 50,000 in monthly revenue, projecting 480 to 500,000 minimum and above to even qualify. And stronger credit, like not even just a 650 in this market, like 700, 750 a lot of the times is what they want. More experience, everything else looks good. It has to be looking exceptional for those A tier, B tier or so lenders to look at. So I'm going to close it up here, just under 10 minutes, and I'm going to leave more information down below in the description. So make sure you check out the credit-based funding options, and I'm going to leave the questionnaire as well. And give it a look. And it is a Saturday, so just in case you didn't know, I'm kind of still in my early morning PJs and so forth, because I've been working and here from my home office. So look at the credit-based financing options, determine on, hey, well, if I could do revenue-based, but I won't get as much, which is fine, but I can use my tax returns for my personal side. Maybe I do get more. Would that help me? And we look at it from that point of view. If it doesn't work. You don't want to supply that kind of documentation. You'd rather just supply the 3 months of bank statements, a copy of your driver's license, and a voided check. Then that's fine, as opposed to doing maybe a 3 credit bureau check or just a 1 credit bureau check, soft pre-approval with an Experian. And not every credit-based lender and service and organization is created equal. So you have to make sure you're associated with the right one. And I'm going to guide you. I have the different options depending on your credit. And I'll say, hey, this is the best one. This is what we should do instead. But also with revenue based, if you're not depositing frequently and you're getting deducted maybe on 7,000, maybe you're getting deducted $110. Oops, excuse me, turned on, I have Spotify on. I accidentally press play on my laptop. But let's say you do have a payment where you're doing like $80 to $100 a day. Can you afford that about $400 to $500 a week? And then can you afford about a $1,500 to $2,500 per month? And a lot of people can. I mean, you may not be able to. You may have the revenue to qualify, but you're depositing. Are you depositing every other day, every day? That's better to do as opposed to saying I only deposit once a week or at the end of a week or bi-weekly. It's very minimal. I do about 3. Sometimes I have 4. Other times I have 2. And that may not qualify you, it may, but then you're just sporadic. For those types of services, for revenue-based cash advances, even some of the higher term loan options, if available, it's harder to. Repetitive depositing, retail, restaurants, those kind of businesses. And even if you're not in that industry, can still work with higher revenue. See, once you start generating more revenue, the depositing, even if you're thinking, well, I don't deposit as much as this other business, your revenue is keeping up. And it might have not necessarily an implication on cash flow. It could help you move forward. It just depends on how you use the money, how fast you use it, and everybody's in a different situation. Okay. So that's everything for me. Credit-based solutions down below, revenue-based, collateral perhaps, but fill out the questionnaire if you haven't. And if you have, I will get back to you. But credit-based is a great way to go. Get a guarantor, get a co-signer, get somebody who can help you, if I didn't say that already, that you can partner with, and they can take on the debt, they can take on the help from your side, joint accounts, heard of these things perhaps already. But yes, if your credit isn't where it needs to be, but you really want to qualify for credit-based financing, you can supply about 2 years of personal tax returns in a lot of cases. Maybe you already have an existing business, and we'll look at business bank statements. If you don't, you don't. But it can help you. And then there's other things to look at. Okay, so that will be down below in the description. And that is it for now. Talk soon. Bye.